Is it just my imagination, or is there a bit of energy in this room tonight? I'm feeling it, and I hope that's a precursor to the stock market going forward, because we need you guys. I mean, you guys being retail investors, this is what drives the market and value, as James was saying earlier in his presentation. And there's a bit of a bonus there. James, are you still in the room? I don't know if you are, but I didn't think I was going to be able to pitch to a fund manager tonight, but and with only 2.5% of your funds in healthcare, and you're looking for good growth stocks and small companies, then I hope you're looking. So what I'm going to do today, as the title slide says, is introduce you to Incanthera and the transformational deal that we did with the world's biggest health and beauty retailer that we announced in December 2023. And we've had a lot of news flow since then, and I'm going to take you through that and hopefully give you the future look as well. I have to say I'm here tonight with my colleague right at the back there, who's our company secretary and head of communications, Suzanne Brox, and of course we will be here at the end in the breakout room if you want to come and see us and chat to us. So, brief introduction. I'm not going to spend a lot of time on our background because I really want to tell you about how we've brought the company on. And there's a gentleman in the audience today, actually, who came up to see us just before we came in. We were having a cup of tea. And he looked at our badge and he said, are you the biotech company? And we said, well, I'm not sure how you define biotech, but I think we'll hopefully demonstrate to you today that we have changed from what I would call a typical biotech profile. And what I mean by that is, and I've been in biotech myself personally for a number of years, it's a company that is doing really valuable research into pharmaceutical drugs and treatments of all sorts of ailments. But from a corporate perspective, an investment perspective, it's non-revenue generating, it's loss-making, it's constantly coming back to the market for capital, and it's a long-term play for anybody to be investing in a company like that. And up until 6 months ago, that was the profile of Incanthera. And we were formed in 2010, and we spun out from the University of Bradford here in the UK. And a little known fact in the university, they have a big research unit called the Institute of Cancer Therapeutics. It's a 4-story building hosting about 100 people, right from professors, PhDs, extremely clever people, working in groundbreaking research in oncology and cancer therapeutics, and that's where the name comes from, clearly. And when you get those sort of institutes, they get to a point where they've done some really, really clever stuff at really basic level, and they're coming up with some great ideas, world-breaking, but they don't have the experience or the infrastructure to take those discoveries and then develop them into what eventually will become pharmaceutical drugs on the market. And that's where you get what we call the typical spin-out from these universities or research units, and that's where Incanthera started its life. So it was spun out from the university, and if you crunch up Institute of Cancer Therapeutics, you get Incanthera, so that's where the name comes from. So for 10 years or more, we were that typical biotech company that I talked about. And then in December 2023, we announced a groundbreaking deal, and I think I described it in my statement at the time as being absolutely transformational for the company, and it is, and it will be. And if you think of the description I just gave you of that typical biotech, we have now changed, or are changing, I should say, into a profile of a company with revenues growing extremely quickly, profitability from year one, and paying dividends, i.e. of the profits we're going to make. So how are we going to achieve this transformation, what appears to be a miracle overnight in 6 months? I'm going to come on to explain that and this deal that we've done with an outfit called Marino, based in Europe, who are a fully owned subsidiary of a massive group based out of Hong Kong called A.S. Watson, who in turn are owned by C.K. Hutchinson. I'm sure these names are very familiar to you. But to put it in context, A.S. Watson as a group owns 16,000 stores across the world. They operate in 28 different countries, and they've also got an online presence, clearly. To put that in context, Boots, I believe at the moment in the UK, has about 2,000 stores. That gives you some sort of idea of scale. And we have entered into that deal with these guys to deliver a new product range which we've developed in conjunction with them. It's an innovative luxury skincare range, which I'm going to come on to explain. But the real the real key here is it's not just a new skincare. It's backed by proven science. It's backed by things that we know that work for the person when they're putting it on the skin. And I'll come back to that to explain. So what are we moving into? We're moving the company from, we were developing a lot of this clever science, which we still have in the company, and we haven't thrown it away at all. I do make that point. And we were developing cancer therapeutics. We were canceling treatments for cancer, and in that situation, you go through a very, very long regulatory process to get these products approved. And we've now turned the company round into a dermatological play, where we are in a market with 180 billion potential, where there's immediate revenues, as I say, and immediate profitability. So we're not more reliant on the capital markets to come back for capital growth. And this is where I think the investment community over the last 3 to 6 months has really seen the spark in Incanthera and what they see going forward. So what are we talking about? Let's just put a little bit of color on this for you, if you pardon the pun with the color of the slide. The bottle that you see here is actually one of the prototypes, and we've upgraded this for the launch, which is happening in September. But it just gives you an idea that we're talking about we'll be operating along with A.S. Watson's in the premium end of the market. So that, the very high brands of skincare that I'm sure you will all know. But the actual launch bottle is going to look a lot more impressive than that. But what we're talking about, if I could just do a little bit of science, if you don't mind for the moment, we're talking about delivering an active which is called either bioactive vitamin B3 or niacinamide. And some of you may know about this compound or not. It's been around for a long time. And you may say, well, hang on a minute, I looked at your company before you came on tonight, and I Googled it, and you can get niacinamide in lots and lots of different products, and it's very cheap, and you put it on your skin, and it supposedly works. It doesn't, and we've proven that in tests. So we've got a combination of two things here. We've got niacinamide, which has been proven in clinical studies, regulated clinical studies, to have a beneficial effect in patients that are prone to skin cancer, melanomas, what we call actinic keratosis, where you get little lesions on your skin. I'm sure we're all very familiar with that. And that's more exposure than we used to have maybe 20, 30 years ago to the UV rays. We're all traveling a lot more exposure. And that is a very high incidence, and that incidence is growing every year as we see it. And in the clinical study that was performed on niacinamide, it's in Australia actually, not done by us, a few years ago, patients were given niacinamide orally through a tablet, and they, without any doubt, it proved statistically significant that it gave those patients benefit in terms of repairing their skin and just underneath the dermal layer of your skin and the cells. It restored the DNA of those cells. It tightened the skin and made the skin feel better. And even on the surface of the skin, it started to repair those lesions that you saw. So an outstanding success as a clinical study. So now you're going to say, well, why isn't it on the market? Why didn't somebody launch that? Why are we not all using this? Because we need it. The unfortunate thing was it is an oral product. So you've got to take, excuse the pardon, you've got to take buckets load of it. That's not a technical term. You've got to take buckets of it every single day, because your body, you've got to load up your blood levels with any drug that you take for any condition, and you've got to keep those levels up so that they continue to have the beneficial effect that you're looking for. And your body is designed actually to excrete drugs, when you're not getting any further benefit from them. So what you're trying to do here is take a drug in through your mouth, it's going all through your body's systems, and you try and actually get it, what I call inside out, up to the surface or just underneath the surface of your skin to treat what we're trying to treat here. That's fine, but in order to do this orally, you've got to take it every day, you've got to keep your blood levels up, and you've got to take an awful lot of it because of the effect of your body deteriorating the volumes that you're taking to get enough to the part of your body just under your skin where it's going to do you benefit. So in practice, it doesn't work. Nobody's going to take this amount every single day. in order to have a benefit which is clear. So the challenge for the pharmaceutical industry for years is not just on this particular compound, but how do you deliver drugs into the body? You deliver them through your nose, through your mouth, through an injection, lots of different ways. It's been very difficult, if not impossible, to get drugs through the skin. Very, very, very difficult. Your skin is the largest organ in your body, and it is an organ, like your heart and your kidneys and everything else. It's the largest organ in your body. It's very durable. Do any of you leak when you go out in the rain? No, you don't. When you cut your skin, does it repair itself? Yes, it does. It's very, very, very durable. And because it's its durability, it's very difficult to get things through it. We all know this. So Incanthera have this combination of the benefit of niacinamide, which has been proven clinically, and a patented delivery system, as we call it. The delivery system basically is the skin care cream. And the combination of the two, and it's the clever bit here, is the combination of the ingredients that make up the solution, make up the cream. Yeah? And you put it on like any normal skin cream. It feels really nice, and it makes you feel good already because you're putting it on your skin. But the combination of all the different ingredients then push the active through your skin without damaging it. You don't see anything that is affecting your skin. It doesn't get red. You don't get holes in your skin. It pushes it through the skin, and it resides just underneath that dermal layer, and where you need to repair the DNA of your cells underneath there that have been damaged by UV rays, just general environmental attack, anything. And that is what the very, very clever bit is that attracted Marino and Watson's to this. So let me just take the story one further. So in December 2023, we announced this transformational deal, as we called it at the time, with Marino. And the reason that we got into this with Marino is we were introduced to them at the beginning of 2023, and they do have a pharmaceutical side to them. So they have like the traditional pharmacies, if you like, stores, and they also have their health and beauty side as well. And we were introduced through very high-level contact in Watson's. And we went to talk to them about, would you be interested in partnering us and helping us develop some of our ideas in the oncology side on the pharmaceutical development? Because young biotech companies, growing companies, I said earlier that they always need to keep coming back to the market for capital. The other alternative is you do partnership deals with other pharma companies or other bigger companies to help you fund your research, and then you split the sort of financial gains in the future. They turned around to us completely not what we were expecting, and said, "Look, actually, we don't really want to do this with you in the pharmaceutical side, but we have a real need in our health and beauty side to have a product which will appeal to what our consumers are wanting these days." And their consumers, the way they describe to us, their customers, if you like, are getting ever more savvy. They're getting more savvy about what they're putting on their skin. They're getting more savvy about the beneficial effects, hopefully, of what they're putting on their skin. They want to know that what they're taking from A.S. Watson's or Marino and putting it on their skin is going to do them good, and they want to know why. What's the scientific proof of what they're doing? And they're not just going to accept going into the future that it's got a nice bottle or it's got a nice package and it's got a name which everyone recognizes and it's got a nice perfume to it. They're very, very much more discerning. And what we see is you guys with the proven scientific technology to be able to deliver through the skin this active ingredient, which has been proven quite separately to work. The combination of those two, and if you can develop it with us, and this is really important, we developed it with them to their requirements. If you can develop that with us, we will have a winner here. This is what we need. This is the gap in our shelf that we have. This is what they really wanted. So this was not us selling to them. This was a demand pull from the biggest health and beauty retailer in the world. Talk about being stunned. We were absolutely stunned. So we spent the year of 2023 developing it with them. Our technical guys were backwards and forwards. Their European headquarters is in Zurich. Just getting everything right, getting consistency right, getting the packaging right, getting the look right, and being able to describe eventually this year when it launches in September to their consumers exactly what it is that's very special about this product. And that's what's really attracting them. So what we announced in December, what's on this slide here, is the deal. We announced at the time that the first production order to launch would be 25,000 units. And when I talk about a unit, we've got a product range of 5, so hand, body, face, etc. And each one is a unit. So 25,000 units would be 5,000 of each, obviously. And that we will be launching it sometime in 2024. And the details of how we're going to do that. We're a very small company. We're very lean and mean. We go by what I call the virtual model, the outsourcing model. And so we've manufactured, we do all our some manufacturing, subcontraction, contract manufacturing, if I can get it out of my mouth, with an outfit called Freaka in Switzerland. Now, there's 2 reasons for that. Freaka manufacture for all the well-known brands, skincare brands in the world. So L'Oreal, Clarins, and they do this. They've been doing it for years. So the quality is absolutely there. And they're in Switzerland. And you say, well, why does that matter? One of the requirements from Watsons is we want this made in Switzerland. That stamp of made in Switzerland on the package is very, very important as a quality mark, especially in the Asian market. It's seen to be a premium product and a quality product. And you can't put made in Switzerland on your box if you don't make it in Switzerland. So this works very well for us because we don't have to invest in infrastructure, we don't have to invest in manufacturing, all distribution, everything is done by Watsons and Marionnaud. So to us, it's perfect. Everything works very well. And this is what we announced in December. And you might say, well, that's fantastic. Great. What else do you need to do? Well, okay. So in March, we announced that we had been discussing with Marionnaud, and we'd up the order. They're very, very keen. They're saying to us right now, we have 16,000 stores, guys. How are we going to fill those shelves? 25,000 units isn't going to do it, so can we do more? Now, we're in a situation where we don't need a lot to pay for our overheads of the company. The more financial resources we can get into inventory, and this is what it's all about. If you're launching a retail product like this and you get it on the shelf, great, you get it on the shelf. The last thing you can do is allow it to run out. You know, if you get all excitement going, everyone clears the shelves, and the guys at Marionnaud or Watsons come and say, right, we need to replenish those shelves, and we don't have it to replenish, then you just lose it. So we're very, very aware that we need to make sure that we keep our inventory up, and we can both replenish the stores when they sell them, and as they roll out through Europe and Asia over time, that we build the inventory to supply that. So we agreed with Marionnaud that we'd increase the first production order from 25,000 to 50,000, and gave some guidance that first order would generate about £2 million in revenue. And that's the first revenue of the company ever. Yeah. And we expected the second order to be a magnitude more of 250,000 units, and we'd also expanded the product range from 4 to 5. So very well taken, really positive feedback. And then literally just a few weeks ago, we announced that we'd doubled it again to 100,000 units. And this came about for 2 reasons. After the update in March, we got a lot of interest from fund managers, institutional fund managers in the city to say, look, we really like this story, how can we get involved? We'd made a statement 3 months earlier to say we didn't need to raise any more money, we weren't going to dilute shareholders anymore. And then we got this overwhelming demand to get involved. So, and then Marion on the other side is saying, can we up the order? Can we get more product? So we took the decision to take more money on board. So we did a fundraising, and you can see here, raised, is it on this slide? Yes, 4.1 million. And we upped the order to 100,000, which will generate about £4 million in the first order. And at the same time, we put out, or we didn't, our broker put out a research note giving guidance to 10 million revenues for the first year. And this first year runs to March 25, just to put in context for you guys, and predicting 30% EBITDA and cash generation. Now, this is that turnaround I was talking about, how you transform a loss-making biotech company into a revenue-generating, profitable company. This is an extract from the research note, and I think in the breakout room, I think I saw some of you already picking up the research note. There is a hard copy of those if you want to see it, and it's on our website as well. But I'm just going to highlight a couple of things here. I can see I'm running out of time, so I'm rolling. Don't worry, I'll be done in a minute. But you can see in 25 on the top, the 10 million revenues, and then this is the predicted growth. Now this, I mean, I've been in business a long time. This is stunning growth, and I know I'm saying it from a biased position, but you can see that growth, 10 million to 33 million to 37. That's only assuming we launch in Europe. And the guys are very keen at AS Watson's that we accelerate our launch into Asia as well. So there's a little bit of prediction that the research analyst put in on the bottom, saying 10 million this year, and that goes to 33, then it goes to 100 million. Well, we're currently valued at about 25 million market cap. Do you think we can stay there with these sort of revenues and 30% EBITDA? I don't think so. A quick shout out for AQUIS. We are listed on AQUIS. We listed in 2020, just as we all went into lockdown, unfortunately. And it's a myth that you can't get liquidity on AQUIS. It's a myth that you can't attract very, very high-profile fund managers in the city. It's a myth that you guys out there as retail shareholders, or investors, I should say, aren't interested in AQUIS stocks, because we've done it all. Look at the share price graph there. We've got some of the best, well-known small cap fund managers into the stock now over the last 6 months, and they're all very, very complimentary about the prospects for this. Look at the bottom line, if you can see it, and you can see it at the back there. 55 million volume shares traded in the last 6 months. And you tell me what AIM stock of our size trades that. It doesn't. So I'm a big supporter of AIM, and I've been all the way through, and the whole company is. And I think we're proving that if you've got the right story and the right profile, it doesn't matter if you're AQUIS or AIM or in the main list, you get the coverage, and you get the attention, and you get your share price moving, you get your valuation moving. It's as simple as that. I'm not going to, Roland's really going to start sort of coming up and chopping me off the knees in a moment. I'm not going to go into this, but it's just to a point that I do make, and I think I made it right at the beginning, that mix between institutional and retail shareholders is really, really important. And it's great to have the opportunity to speak to retail investors like yourselves face to face, because we don't always get the chance. Institutions can always pick up the phone and say, can we see you next week? And you've got to go and pitch. You guys don't always get this chance, which is why I really like to present to these evenings. And Roland is breathing a sigh of relief now because it's the last slide. But I'm not going to go through this, because I think I've been through it. Just one thing to say, though, in finishing. Suzanne helped me out. Was it last week we promoted to Apex? So AQUIS is in two sectors, which is access sector, which is when you first join the market, and Apex, which is once you've got above 10 million market cap. You demonstrate good corporate governance, you've got a couple of independent directors, and you can show good growth. What it also does for people like yourselves, and I know a lot of you are on all the platforms, or I guess there's a lot of AJ Bell people here today, when I say you're on those platforms, it opens up the ability for retail investors like yourselves to be able to trade in Incanthera on Apex. I know that AJ Bell is signed up, Hargreaves Lansdown signed up, Barclays are signed up, and it really does make a difference if you want to buy and sell shares. And we are seeing, just in the 2 days when we came up from Access to Apex, we saw an uplift in the volume of our shares in terms of trading. So it does work. Just another shout out for AQUIS, that's all. I'm done, Roland. There you go.
Thank you very much, Jim. Thank you.
Thank you. 2 questions. First one quickly. I happened to read in Investors Chronicle this week that eTherapeutics, I think it was, couldn't get funding, etc., which goes against what you've just said. I clearly don't want you to, or need to, get you to speak about them, but you've made a point that clearly funding is available. The second point I was going to make is I don't use skincare myself much, but I see the adverts on the TV. For example, L'Oreal, and it's got hyaluronic acid in it, and all the sort of sales pitch. This is clearly something that's going to be very beneficial, not just going to get wrinkles, but it's going to do some good things. How are you looking to advertise it on the TV? I guess it's going to be aimed at women to start with. I'm not trying to be sexist or anything. But is that what you're looking to do to sort of get it into the psyche? Because, I mean, hyaluronic acid, I don't know what it does, but to me, acid burns, and maybe it burns your skin. But the point is, I remember it, and women go and buy these things, because the missus does, and it's got to be beneficial. And if it's beneficial for everybody, surely then you should be putting it in sun cream, rubbing it on, and men will put it on because they, face cream after a shave and all that sort of thing. So, how are you looking to advertise it to the masses? Because clearly it needs to be for the masses. Thank you.
Let me address the first question. eTherapeutics, RedX Pharma, there's one other. They're all back to my description of typical biotech company. They're doing great things. I mean, I know all the guys there, and they're doing really, really good research and development in various areas. The point that they were making, they're all coming off AIM. They're delisting from AIM. They're going private. And what they're saying is, with our profile, it's very, very difficult to raise money because the share price performance of these profiler companies hasn't done very well over the last few years because there's been a flight from risk. There's been a lack of capital because there's been a lot of capital withdrawn, from the market. People aren't investing. And so they've taken the decision that they can do better in a private capacity without the cost and hassle and everything of being a listed company. That's their decision. I'm not going to comment one way or the other. But it is very much a comment that there is not enough capital in the UK for cash-hungry biotech companies. If you went to the US with their profile, they'd get 100 million funding straight away. I'm not going to say any more about that. In terms of profile, we're not going to have to do anything in the first instance. A.S. Watson's have got one of the biggest engines for promotion and advertising and profiling and influencing and all this stuff that goes on and social media. This is all part of the deal, and this is why I say for us it works very well. We've got somebody manufacturing, we don't have to invest in that. We've got the biggest health and beauty retailer in the world doing our advertising promotion for us. Yeah? Now, having said that, they only have exclusivity in their areas, geographic areas which they operate in, which is essentially Europe and China and Asia. We already have potential deals lined up in North America, South America, Australia, and that's for the future, and I didn't talk about it this evening, because we need to walk before we can run. We need to get this deal nailed down. But the deal and the profit margin split with Watson's, that's all counted. We don't need to worry about distribution across their portfolio. That's all done for us. All we need to concentrate on is making the stuff. And that's where as much financial resources we can get in, we get more inventory, we drive revenues, which was the basis for why we raised the money just recently. So how are we going to drive in the future? We're going to put all the revenues are going to go straight back in, right? We are also going to tap into trade finance, which is completely non-dilutive to shareholders. And, I've been talking to some guys that could be given a 5 million facility, 10 million facility. You imagine that going into revenue and generating for every batch that we produce, we're going to get 4 times the value of that cost back in revenue. Just think of the accelerating effect of those revenues and that extra trade finance going in to drive this forward. The numbers on that analyst research note, I think, are very conservative. You would expect me to say that, but when you look at how do you fill 16,000 stores' shelves?
On that note,